All right. So this is the chart structure which I follow. Let me just add everybody from the security. It's already on. So I use a very basic setup in terms of technical analysis. First and foremost is you need to set up a daily candle. All right. I don't use 5 minutes or 15 minutes. I start from a daily and I extend it to a weekly for my like day-to-day directions. And during the day, I tend to look out at the 30-minute candle. All right. So I use candle and I have changed the color of the candles with red and green. Plus, based on my different style setups, I have changed them to blue and red as well. All right. Then I use a couple of studies. First one is moving average 12, which I tend to use with the color green, and the moving average exponential with 34. All right. Then I use volume. Sometimes I use open interest in case of options. In terms of equity, this is irrelevant. All right. This is one of the two indicator which I have bought. You can use like use script to get this if you're interested. All right. So this is the very basic setup first. Then I tend to use a couple of drawings. One of them is Fibonacci retracement. Then I use Fibonacci extensions, and then I use regression channels. I will show you how I use them and what's the benefit of using them the way I use. All right. And in case somebody has any questions in between, please ask. But like I would expect everybody to be in ensuring that yes, we should not overlap or try to speak over each other. One by one, I'll address your questions and we'll go through the market views, the setups, and couple of scanners which I have made. All right. So let me start from ES or people use SPY. All right. So let me start from SPY. So I'm going to clear my drawing set. I'm going to remove all the drawings which I have so that it's clear. Okay. First thing I will do is I go into my settings. I remove my volume. Okay. So I can see the candles pretty clearly. And before doing anything, I would like to concise all of it by using a weekly candle. All right. Let me just hide this. So the first thing which I like to do is, let me put it here. I would like to see a yearly low. All right. And from where that yearly low has come. Okay. So I would like to choose a tool called Regression Channel. Okay. And I would start on the weekly candle from the low of the year. All right. And I draw this. And how would I get all these lines? Let me just show you. Usually a regression channel is one line and up above the main line and one line down. But what I've done here is if you right click it, edit properties, first thing is I have changed the mode to RAF channels instead of standard deviation. RAF channel is an important one. Second thing, I have added multiple coefficients here. Usually you will find coefficients of 1, -1, and 0. But I've added certain increments here and shaded them with a separate color so that I can clearly see where I'm heading in terms of my regression channels. All right. And I have given them like a slightly uh, wider width so that it's easier for me to identify that yes, this is the top of my resistance line or this is the bottom of my support. And the middle line is called the trend line. I have kept it as shaded so that I can easily identify in my channel what is the trend going on right now. Okay, so these are the settings. You can go back and set them up and you will find something similar. All right, so what I did was I started from the bottom of the yearly low. I put my regression channel and it gave me a direction that yes, the market is going from left to right in an upward direction. It means the market had a positive momentum and it was going in the positive direction. All right. Now I would break it down onto the daily charts just to have a clear outcome. Okay. So I have my 12 and 34 EMA plus I have my regression channel right now and the indicator which I showed to you. So what it tells me is that market is trying to be above the trend since February, but it fails. It tries again, it fails and comes back to the green and red line, tries to break out, goes up, maintains, and the green and 34 and 12 lines, they tend to move progressively with the candles. There's always like a theory which I believe in that no matter what, candle tends to come and love the red and the green line. So if a candle breaks out like here, it will go up, will test the resistance line, and then come back and test these red and green lines. So right now, what is happening in the market is uh, this is the trend line which is there on SPY. All right, and SPY is trying to break this, but somehow it's not able to cross it. So what happens after that? It fails here, goes down, comes and tests this green line, and then it breaks that green line once again. Now the target is 427. So if you are a technical trader, you would like to see that if it crosses, like SPY crosses this line, it should go up and try to test 453. But right now, if you see from the trend line here, every time the candles, these are the daily candles, the candle tries to breach this line, it kind of face a resistance and come back and test the green line. It fails further, it tests the red line as well. So after a very long time, like from, I need to mute people. Sorry about that. You can unmute yourself, but I'm just muting everybody for now. But if you see here, it tries to cross or breach this central trend line, but it fails. It touches it. Let me just increase. You see right there. It touches it. It fails. It comes back and tests the resistance line. Meaning you need to be watchful of the fact whenever it rejects from the trend line, this is the dotted line is the trend line, it will always come back to find the support at 12 EMA. And if it fails 12 EMA, it will go and find the support at 34 EMA. All right. So look here. It fails, 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 doesn't break out, come back and test right there. Second thing, which is also important, is to understand the candle patterns. So right here, I'm not using any extension hours or after hours you like. I'm only using the day hours. When you're creating a chart, especially on any of the stock or ETF, do not use extended hours. The outcome of that chart will be different than what you use, like in the scenario when you're not using the extended hours. So here on Friday, this was a dodgy candle. Dodgy candle meaning when the price of the candle opened and closed around the same price. So in this case, the candle opened at 434.81 and closed at 434.75. This was Thursday. Okay, so it means that market got rejected here and market came down. It means SPY was confused. What should I do? Should I go up? Should I go down? It had no clear answer. On Friday, we had a candle which started from the top, like open and high were same, exactly the same. All right. And when it came down, it completely covered this candle. So it became a bearish engulfing. Once you have a bearish engulfing candle, it tends to have next two candles back to back as downside. The max it will come is the middle of this candle. So it opened at 436, went down to 431. So around 433, 434, if it crosses that, then the bearish engulfing fails. Otherwise, the next candle, you should be good to short at 433 and let it go. It will come and test 427 for sure. Okay. This is based on 1234. Now, how to refine it further? So I'm going to use a couple of more tools which we have and then find exact levels. So I'm using Fibonacci extensions. So for this, I tend to again look out for the nearest lows. So I would take this 320ish, or if you want to be very optimized, try go for the weeklies. So here, this was the candle. Okay, you can use extensions or you can choose retracements. I will explain the differences later on. First, I'm using retracements. Retracement starts from top to the bottom. Okay, when you do that, you can check the low was 218. So I'm checking at the low before that. I'm picking up the latest high before that low. Okay, so I'm picking 218. So if I have to be precise, I will click here. Sorry. I will click here, activate my drawing, and 1 second, let me just choose it. I click here and edit my properties, and in my properties, I'm trying to put the exact number 218.36 so that my levels comes out to be very precise. 26. Okay, and here the highs were right there, which was 333, 333, 38, and this was 339.08. It was 339.08. All right, so I have these levels. Now, if you remember, like when we were talking in the past, let me go to the daily charts and do the auto alignment right there. Remember, did you find market getting a base around 413, meaning the SPY was around 4150 for ES? You will find that there was a good amount of support at this region. And this was the Fibonacci retracement or extension, sorry, retracement of 161. So each Fibonacci level has certain percentages associated to it. So it starts from 0, 23 points, 38.2, 50, 61.8, 78, 100, and it goes on. It follows the Fibonacci pattern. All right. So in this, there's always a movement between these thresholds. 23, 38, 61. These are the most important Fibonacci numbers when you're looking forward in making these extensions or retracements. So whenever there is a touch base of the candle at 0, it will always tries to move towards 23. If it breaches, it will definitely test 32 and 61. If it fails, it will come back to 23. So there are certain rules around it for which like you have to do certain level of study on yourself. These rules you can find them on Elliott waves, or if you want a simple, go and check. So once you set them up, yes, Farsad, you have a question?
Yes, Paji, what is the conversion between SPY and ES?
SPY is actually index for futures. Like when you look at SPX is our main index. Okay, SPY is a ETF of that SPX. So SPX has 500 stocks. Okay,
Mm-hmm.
SPY also has the same composition as SPX, but it is 1/10 of it as in terms of number. So when you're trying to relate SPX equals to 10 time into SPY. So the same composition, if you look at the SPX composition, you will see percentages of Microsoft, Apple, Google around 25, 35, 25 to 30%, and then rest of the stocks. So if you go into the SPY, you will see the similar composition. So ETF wise, it's 1/10 of the index. And SPY futures, which are ES, they are the futures which run like it has the underlying as SPX.
Okay.
Okay.
Thank you, Paji.
This tool is Think and Swim. All right. So this is one way of checking the levels. First, you set up your retracements or extensions, you set up your regression channel, and then you get your levels. Now, we need to further refine it. Okay. So right now, we refined that yes, the the yearly low gave us a 413.75 as our support. Okay, and the next level which comes from it is around 500 something, 535. Okay, but this is a very huge range. So what should I do? Okay, I need to resolve this. So what I do is, instead of looking at the yearly low now, I would like to go back a quarter, maybe 6 months back, and try to create Fibonacci extensions. So in this case, what I do is I pick up the lows in about 6 months or 3 months, whatever you like to have. I would like to go for, let's say, right there, 3 months period. I go here, I pick up the highs and then the latest lows. Okay, this is what I do. In order to make it precise, I will right click there, edit properties. I will do the extension and I will look at the low of this candle. The low was 371.88. I'm just trying to be precise so that when the number comes out of it, they should be very clean. Then the high is, I'm looking at the candle, I'm looking at the top, then 422.88. Yeah, 422.88. Then the bottom is 404. 404. All right, once I am done with that, I click OK. Now, these are the further levels which came into the picture. Okay, now see, market tried to face support at 416, and you will see that candle automatically follows this and all the algorithms. So here the first target is 23.6. So when it came to 404, the first target on a short-term Fibonacci extension was 416. Look right here. When it touched here, it in next two candle tested this line. All right, but it could not breach it. So what happens once it fails to breach, it will come back. It came down. It came down, but again, it's taking the love between the candles and the lines is always there. Whenever they are far apart, they will try to come back. So right here, they were far. It came down, tested this, goes up, tried to break it, and then it gets successful. Then what happens? It tries to test a trend line which we have drawn, and it's coming from the past. It fails right there, and you will see automatically everything comes into the picture. It gets rejected, rejected, and rejected. Okay, but it's still holding up the trend line. It's not breaking out, it's trying to breach it again and again. Here it made the bearish engulfing, so it came down, made a doji, and tested this line. Then again it tried to make a comeback. Let me try to cross this level. Test, test, test. Finally it tried to break down, but no, it failed. Again came back and tested the green line. It couldn't hold the green line, so went down and tested the red line. Again it pushed, tried to breach 423 and failed. But then once it breached, it directly went on to 61. Okay, so you have to be very respectful of these numbers. 38, 61. So here, after the breach of these numbers, it went up directly here. And look at this range, 435, 52. It's getting rejected consistently here. First, there is a trend line. Second, there is 61.8 Fibonacci extension. Third, it is making a bearish engulfing. Fourth, it's my indicator based on MACD and divergence, that yes, it's showing me that yes, it's getting a supply right here. So principally what happens next is fail of this should take us about 50 is usually irrelevant. I tend to have it, but I don't expect it to give me a good solid support like 61 or 38%. Okay. So it comes down right there. The actual support comes around 427. So if you followed this chart on Friday, you were clearly sure that yes, once it breached the length of 432.81, it was making a bearish engulfing. And if you shorted at that moment, you were almost $3 into the SPY. Okay. And you still have a target of 429, which is you can like book your 50%. Once it breaches it, you have a target of 427. At 427, we need to reevaluate what should we do. Should we wait it to go further to 423, or should we book our profit and see whether it makes a bounce? So here we have two level of, I would say three level of rejection: the trend line rejection, then the Fibonacci rejection, and then uh, the volume and MACD based supply. Okay, so based on this, I'm pretty sure, and that's why I put up on Friday and even on my Twitter account that yes, the market is showing a bearish engulfing and it will not be positive. And I made a trade and sold the ES at around 4318. And right now, I think it's trading somewhere around 4300. This is the future, 4302. And it exactly following the same principle. I have not changed anything here as well. It's the same 4153, 4384. If I draw the same levels, I would get the same numbers right there as well. But the principle is still the same. Once you start to short or once you start to go long, you need to find a base for your direction. Okay. So based on this, I decide where my levels are. Second thing which I keep a note on is whenever these candles comes down, what exactly or what level they come and stop. And look at the close, not the intraday lows, right there. You see here, these are almost the same level, 4308, 4309. One time, two time, three time. This time it breached below it. And as and when it breached, you almost got the 10 pointer. So unless and until we cross above 4310, we are good on the short. So that's how you put on a trailing stop loss. Once it was breached, which was like 4329, You need to wait for this. Once it is breached, you can put your stop loss here and let it go. And any questions around this, guys? And you need to tell me that if you understand what I'm explaining. Otherwise, there's no point of having this session.
Aji, between Fibonacci extension and retracements, the way you draw, it was slightly different. You took a low and high for Fibonacci. Uh, re- First one was
First was retracement from
retracement,
high to low.
high to low. Okay.
Yes.
Then for the extensions, you draw slightly different. You took the
Yes.
high, went to the low, and then again found a next high.
No. So in extensions, okay, what you let me just see. This is extension. Okay. So in extension, what I do is I start from the low,
Mhm.
went to
High,
a high,
and again you
and
went
then
came
come
back
back to low.
right.
Okay. And right now I've not chosen the right numbers, but if you
Yeah,
see,
yeah, I mean I got the idea.
see 43.16, it kind of gave me a confirmation that yes, it's a good shot. All right. There's a breach here. There is a right there, 43.85. It's getting negated and it's coming down. So the next level is 4276, 4247. Okay. The other thing which I always mention is that whenever there are gaps on the candles, market usually come back and cover the gaps or fill the gaps. So you will not see the candles on the ES as clearly, but you if see on SPX, you will see these gaps very clearly. Because SPX is not a future; it's an index which is there in the 9 to 4 hour, 9:30 to 4, and ES is something which runs almost 23 hours a day. So
Right.
here you will see those gaps very clearly. So that's why in my post today, I said if we breach these number today, 4330 was really important. If you remember my posts on the Twitter and in the group, I've been always saying that 433 is really important. Look at right there. It tried to hold, came down, hold, came down, held, came down, failed, held, and then it breached. So that's why I always tend to use these numbers. Now, within these numbers, I tend to find wherever is the base. There is a gap between the 12 EMA and 34 EMA and the candles. So candle will come back and love the green line. If it fails, it will love the red line. If it holds and then move up, it will go up, and at a later point, it will come down and test the green line. Right here, it failed the green line, and in the morning, you will see it comes down and try to test 43.82, 43.80. And if you see here, all this has been a slant. There is no clean buying here. Like these are straight. There's no stability here. It just went up right from there. In here, you find it some level of stability. That's why 43.30 was a really good support. But here, there's no support. There's no consolidation as such anywhere in this slant. Okay. Then once it comes down here, this is the previous level where there's a good amount of supply. Once we like supposedly we go down and we come down to 4150, then it is 100% possibility we're going to come down and fill this gap. This gap is there for about 1% or around almost 1% gap. Okay, so these are very clear and simple technical setups. You can add on indicators on top of it. Like I have another version which I use for my intraday. So in intraday, I have added these indicators, which is DMI, TTM Squeeze, RSI, Stochastic Fast. And these are all default settings. I've not changed anything. This is just to have a better confirmation on what I am doing. So after making all those charts, I use that, and then I use my 30-minute candle. I use 30-minute candle as a confirmation. Whenever there is a crossover of 30-minute red over green or green over red, that's a confirmation for me that yes, I need to change the direction. So right here, it tells me that at this point, right at this point, uh, the red came over the green. It told me that yes, it's time to go short. Okay, so what should I do? Should I go short? No, I need to look out what is happening in the DMI. DMI is telling me that the green is the positive strength in the market. The positive strength is going down, and then the negative strength, which is red, is increasing. So it's telling me yes, it is making a case that yes, we should go and do the short. But what about this blue line? Blue line is telling me the power of this weakness or its strength, meaning how strong is this red or how weak is this green. Right now it was showing me no, it's kind of all right, but right here, okay, right here it was telling me it is time to go short because now the strength of this negative is strong. So right here it went up, and then boom 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 it came down. So you need to also follow the blue lines with this. So this gives you confirmation, one confirmation, but here it tells you no, you need to wait, otherwise you will just kill yourself in the choppy market. But here at this point, you got a confirmation. So if you short somewhere here around 43.50, okay, you're almost 20, 30 point in the money if you went short here. And this is like half hour chart. Okay. Second thing is the TTM squeeze. TTM squeeze tells you that yes, how much is like if you compress something at certain level of pressure, it's trying to burst. So in which direction it will burst? So usually it tells you if it is above the green dots, it's trying to have a positive impact. And once the sky blue lines are gone and you see a dark blue, it means that whatever it has to done, it has almost done it. In this case, it was here, and then you had a consolidation, and then all of a sudden it's dark, 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 and the strength is getting lost. Okay, look at here. The green was positive, 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 but then it tend to lost its way. So the positive power which you were looking in the market went away with this, and this is completely intraday chart. Then I look out for RSI. Whenever there is an RSI going up above 70, it gives me a confirmation that yes, it's a good time to short. But RSI can sustain on daily basis above 70 to 80 for a reasonable amount of time. So this is a little less reliable as compared to these two. Stochastic, it's a very fast indicator, but it is again as not reliable as these two, and like this. So you can set up this combination for your intraday once you set up your full day chart, and then save them as a separate style. So with this manner, you can easily come and confirm before picking up any trade. Okay. One of the other things which I wanted to discuss today was a scan.
Pajit, can I ask you a question before
Yes,
you jump?
please.
That the extensions versus retracements, what's the difference? The Fibonacci extensions and
So
retracements.
retracements is like once you fall from the cliff, how much you can bounce. Okay.
Okay, from fall. Okay,
Extension is something that you started from the bottom of the cliff, you went up, and then you fell down. And from there, how much you can bounce.
okay.
It's based on the Elliott wave principles. So let me go back. See, this was, Let me go to weekly just to be clear. See, right here we were there and we went off the cliff.
Yeah.
Okay. So if I draw the extensions here, right from this point to this, it will not make sense. But if I draw a retracement, meaning I was on this journey and then I fell, where should I find strength? So I go here, I will pick up my extensions and check, and I will test them. You will see that there is a difference between the numbers here and the numbers which are drawn from the retracements. So this is the retracement which is showing me the support around 2188 and the resistance around 4133. On the contrary, the retracements, the extensions, starting from bottom, I went up. So I'm trying to test how much strength is left in me. Here, I'm just trying to see that yes, what happened to my fall? Where can I can jump? This gives me a elongated path that how far I can go. This tells me that how much bounce I can have.
Got it.
You once you try this, you will see the difference. And once you start to incorporate that difference in your numbers and your levels, you will see that way to use extensions and way not to use extensions and way to use retracements.
But general thumb of rule um, is like to measure the bounce from top when it is falling from the top to the bottom you took for the
Yeah,
extension. Sorry,
that's a retracement. Like from top,
retracement. Yeah,
yes. That how much I can bounce,
how much you
at,
can bounce.
at what level I would face resistance.
Right.
Okay, and this bounce is not like a small bounce. I'm looking for a bounce which is comparatively low for the year. Okay, only then I would be able to have a clean picture. If you start to put these extensions in weeklies or in monthly time span, then you will have so many levels which are very difficult to manage. So I try to tend and make these levels on the yearly lows so that I
Yeah.
can have, and I keep them until they are completely obsolete and they are no longer valid.
Gotcha.
Okay, let me show you a couple of charts. Apple, this is my favorite one. Uh, Many people were kind of struggling with Apple move, and we picked it up like from 130 onwards. Okay, so when the candle was around 130, it was a confirmation of 38 percentage point two that yes, it has now made that strength. Okay, then it went on and test 135, 139, 146. And as soon as the trend line was also going, it tested the trend line, it right there, it failed. And it came back and closed right on that Fibonacci 146.2, which is like 78.6. Now the idea is if it sustains, like 146 sustains, we're going to come back and test 140. And this will be a really good entry point for Apple. Right now, this is a weekly chart. If you look at the daily chart here, okay, you will see as soon as from 130, it crossed 130 and it held closed above it. Okay, and then it bounced. This was one trend line. Like this is the main one. This is the big support, and this is the middle trend line. You can draw it or you can ignore it, but I tend to have a clear channel, so I keep them. So as soon as it breached, it crossed above it, it always went up right there towards this line. Once it closed above this 61.8, the next goal was 146, which is very clear. Once you have it, no matter what, it will not come down unless it's going in one direction. It faced the resistance right there, and then it came down, and from there it again crossed it, failed at this line. It was not able to like breach and have a good close above it, and it was making a resistance at the trend line, plus the supply zone is right there, and then the Fibonacci. If it holds, like for example tomorrow morning, if it holds 146.2, then you should be looking at 154.45. But the intermediate resistance will be around 150, 150, this range. Once it reaches this trend line, it's going to go up straight away. Let's look at Amazon. I'm just telling you, the charts tells you the picture clearly. It's just you need to understand how to read it. You need not to be worried about what comes in the news, what not. You just need to be very careful. So on Friday, in the morning, I recommended to go short on Amazon, 3600 put, and uh, Google 2540 put, and both of them worked really beautifully. And why I did that? First thing, this is a green line, which is a 12 EMA. This is the trend line, and these are the Fibonacci levels. On Thursday, it closed below 3656. Okay, but it came and tested this 12 EMA. So it kind of took the support and bounced from there. But Friday it opened, it could not breach 3656. And it also broke below the 12 EMA. At that time it was 3619, but now it is closed. So it came down to 3613. It closed down. So the clear idea was it's going to bounce right at 3543, which was almost near to the big time breakout area. But you see, there is a gap. So I am looking at this gap to be fulfilled. Once this gap is filled, which is around 3500, I can go long back in Apple, and that's back in Amazon. And this is a good entry point. So what I and many people have done in the past is that we try to enter somewhere here. So the stock moves up, we lose if we have puts. The stock goes down, and if we have calls, we lose. But if we enter like as a break of this one or a support of this one, we're going to have much better profit scenarios. A very good example here is AMD, which I think we did very clearly. So AMD has these levels clearly set up, and you will see 78.6 at one time was giving a huge resistance, failed. But once it broke out, it went and tested 81.67. Again, 81.67 failed. Once it broke out, it jumped. Again, ignore the 50%. Once it broke out, it simply went on and test the 61.8. Now here, it 61.8 is really important. It breached this, it went on to test the 100%. There it failed. Once it failed, the idea was it will come back and 61.8. It came back. It failed the support of this line, it failed the support of this line. Now, if 61.8 is breached and it closed below it, 85.89, right? Now, the next support comes around 81.67. So tomorrow, if you want to go short on it, don't straight up go short, wait for it, so that if it comes near to this red line, that is a good entry time to go short. And because this the green is still up, so it's still in the positive trend. But if you convert this into a 30-minute candle, you will see that the 30-minute candle gave you a short right at 90. Once you short this at this time and just hold it, the 30-minute candle will give you a very clear picture where the stock is moving for intraday moves or swing moves overnight. Okay, see, once it breached the red line, it's not there in the picture anymore. It's always trying to test the green line. As and when it comes to the green line, short it. Whenever you short it, you will be in profit. You have to follow these principles clearly. Do not look at any noise or news or my friend called me and said, Ki, haan, buy this and buy that. No, verify it. It's your money. You have to be careful about what you're doing. I have done silly mistakes. I've almost decimated my account, but I'm learning every day. And I want to share all of that with you guys. That's why I'm holding this session late night. Okay. One other thing which I wanted to share was regarding scanners. There are multiple scanners which you will find on the internet, but two or three are really, really useful. One which I used to tend like do that manually, but now with help of my friend Sunny, I am able to do that. Uh, where is that? Yeah, this scan. So if you have a scan like this, which is based on the principle if this open equal to high or the stock has open equal to low, one second. Niranjan, I cannot do all of that daily basis because I still have a job. But I do post on the Twitter, but I don't know how many people follow me on Twitter. I do all this every night. So we'll come back to Twitter and YouTube later on. First thing is let's go through the discussions which we are having. So this is a very basic scanner, but it works 100% of the times. What it does, it tends to look out for three common things: the price, and price has three variables. It usually has four variables, but I'm only considering three: open, high, low, and close. I'm ignoring the close. I'm only considering the price at 9:30, 00 seconds. Okay, and this will not change throughout the day. Open, high or low may change throughout the day. Okay, but I'm looking for the stocks where or which open and their highs are equal to open price, or stocks where high is equal to the open is equal to the low. Once you see them, like in case of IBM, like supposedly you know nothing about the stock market, you just want to do a paper trade. This scanner will help you that yes, what is the simplest way to make dollars in the stock market. Just treat it like an ATM. Go here, run this scanner, and find open equal to high. Whenever there is open equal to high, just short that. Your stop loss is your price at open. So in this case, IBM, let's look at the chart of IBM. I'm going to make a chart for a 1 day. So IBM is right there. Okay. And IBM on Friday has made bearish engulfing, because it covered the entire body of the previous candle through its fall. So it's kind of a negative move. Plus, there are gaps here, which also needs to be fulfilled from 134. So it's giving you an idea that yes, it's going in the negative direction. Second thing, if you shorted it, look at the 30-minute candle. If you shorted it right on 9:30, okay, it opened. This is the candle 9:30, right? It opened right at 141. Supposedly you ran the script at. Let me just further break it down just to give you a clear idea. Supposedly you miss right there. You ran the script at 9:45. Okay, it was open equal to high, and the low here was 140. Even if you did a 140 short at this time, it went down to 138.59. So almost 1% gain just by following that simple scan where open equal to high. Look at Goldman Sachs. It opened at 374.93, 374.93, and both are same. So if you do the same thing on this, right? Let's say you didn't saw at 9:30. You did that at around 10ish. Even on 10ish, it was trading at 371. So if you went short even at this time, like half an hour is a good time to look into the market. you would have made good money. It went down to 363. Okay, and you can also confirm that yes, the red line was over there and the green line was down, so it's negative. That's one confirmation. Second confirmation, open and high was there. Then you have all indicators. So if you cannot do all those things, you can simply come and use that principle. So if you came here and shorted at 371 and made a stop loss of 375, you still had a better risk reward against $4 or almost $3 of risk. You have a benefit of about $8 to $9. So this is very basic thing, but it works. And right now I have set up on my own watch list, but you can try this on all the symbols. Okay, so let me just scan it and show it to you. Yes, Firsat.
Paji, quick question.
Yes.
That's a very good entry strategy, but how do I determine at what point should I exit out of the deal or the trade?
Uh, that's really important. So that's the there's 30 minutes. No, 30 minutes. So at supposedly you shorted at here. Okay. Whenever the candle comes around this line, if it is going up and comes down to this line, or if it from here it goes up, whenever it is there and the trend line is up, or in this case the trend line is down, you need to just see if the length in the candle, meaning the price action, is getting shorter and shorter, and it is getting stable, plus it is moving next to the line. At that time it's better to exit out of the position. Supposedly you shorted here, okay,
Mm-hmm.
at this moment, and the price was 372. I'm just taking the open price. I'm not taking the
Okay.
best price. I'm taking open 372. So here you shorted and it was not going down, 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 and down. It's not going down. You realize, oh, it touched this line. The price was 373, and you can exit and you can cut down on your loss. Okay.
Okay.
And then you see, oh, it went up. Let me see if it breaches the line and the trend line changes. Yes, it does, because this is 30-minute candle. So right here it breaches. It gives you 376, and again it fails. It asks you to enter leave around 375. So here you exit again with a small loss as compared to a big loss. But here it came down. You shorted right at this moment, and then
Mm-hmm.
you gain. Again you shorted here, and right now you can keep that position because it did not came here. So it allows you to minimize your losses, plus if there are gains it helps you to let it run.
Okay.
But in principle what I do is, in options, because this is for the equity, in option, in principle, if I get 25% profit, I tend to book 25% quantity. If I get to 50% profit, I tend to take 50% of quantity, and then I keep my stop loss as my cost so that I do not lose anything. Second thing, when I'm doing trade like this, where there's a consolidation and there's a chance that yes, I can get in loss, I
Mm-hmm.
tend to see the candles on the 30-minute close. So 30-minute close give me a clear picture that yes, it has gone up from my line and now I need to exit. If you are in short position and your green line is down and the candle goes above the green line at the close, it's time to exit.
Right.
Similarly here, if the candle goes through from green to red, it's time to exit. And you can try this in the past, back test it. You will find it works.
Okay. Okay, Paji. Thank you so much.
Okay. Uh, I think for today, I just wanted to cover all this. So now I'm open for any questions if you guys have any, and we can go through that. Or if you have any positions you want to discuss, those positions you want to go through, we can evaluate it right here, and then you can go back, do your due diligence, and figure out that what we discussed and what you find out, does it match or not.
Baji, this is Sangeeta. I just wanted to ask a question about EMA. Why are you using 12 EMA instead of 20?
I have spent 10 years to find this out. I've tried like 8, 9, 10, 11, 12. This works for me. So 12 and 34, I don't think so many people use 12 and 34. They
Right, because
use,
that's not a standard, right? Yeah,
yes,
okay.
they use 8, 21, 9, 21, or 20, 50, but I don't use them because
12 and
12,
34.
34, I have tried almost like for 5, 6 years, and I've been using this for last 10 years, and it works very beautifully for me.
Okay, yeah, that's good to know. And my second question is related to open equal to high.
Yes,
So, open equal to high, the concept I don't understand because the high can happen, like you said, anytime during the day. So when
yes.
you are looking at it, so how do you determine that that is the high, actually high of the day or that time?
So what I do is I try to run this scanner, or I tend to look at my watch list around 9:45. So by that time, if something has managed to hold open high or open low, I try to pick that up. And then I put my stop loss as high or low, so that in case I prove to be wrong, at least I will not have big loss. Because in that case, I'm covered, because as soon as the high is breached, my theory or my strategy fails. And I don't want to be a big loser. So I try to keep a very small stop loss. Like in this case, for example, I'm not going to go in this. I'll go back to my watch list. 1 second. Or let me go to index. Okay, let it run. So index, this is silver. Okay, silver today opened at 2561, and it made a high of 2561. Okay, this is future. It opened at 6 o'clock in the evening, Sunday evening. So if I look at it and I want to go short, I can go short. At what time I should look at it? Usually I try to look at it 15 minutes after the open. And if I went short, I would wait a stop loss around 2570 or 75, just to give me a little bit of bandwidth in case it just touches the high and come back.
Okay, okay.
So I'll show you one example here on the charts. Thursday, Amazon on the half hour. Yes, Thursday is right there. Okay. So Thursday, look at this candle. Amazon open. I'm going to show the prices right there. Okay. So Thursday, Amazon at 9:30 candle. No, this one. Yes, 9:30 candle made a high of. Let me break it down more clearly to 5 minutes so that you can all see. This is Thursday. All right. So this was the first candle. Look at the price here. Okay. The price was 36.94. The open and high were same. Can you see that?
Yeah.
Now, if I would have posted or placed my stop loss exactly the same price, this candle where it came to 36.95.4, which is about $1 up, would have taken it. But in this case, I would try to place a stop loss around this range, a little up around 3700, but still not big enough. But I'm still like $4 5 for Amazon, like stop, you need to give $4 5. So if I kept my stop loss right there and it failed, the red line and the green line, I would have just kept the short, 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 and go on. The same thing I did on Friday. Like, I don't know whether you were on the call when we did at 9:15 to 9:45. Before the market started, I clearly mentioned that if we breach 3620, it's time to go short on Amazon. And 3600 put at that moment was like 5 or 6. It went on to make like 30 35. Similarly with Google put, we started at 2 and stock was 25.50, and it went on to like 18 or 19.
Yeah, yeah. No, I saw your trades, but I was not able to attend the calls. So yeah,
That's
saw your
fine.
trade.
But I'm just
Okay.
telling you the principle
Yeah.
how these things come up.
So when
You-
open equal to high, that means you short it, and when open equal to low, you go long.
Yes, this is the basic principle, but you can like wait for 15 minutes, get more confirmations on your charts and your setup, and be more comfortable and try it. That gives you kind of confidence, because once you have confidence in your strategy, then it gives you much more benefits than you expect. If you do not have
Because
confidence in your strategy, then you tend to get confused and panic, and then you regret, oh, I cut it right now, and then what happens? It jumped.
absolutely, you have to observe for
So
a
try
short
this on the
period.
paper trading. If you do not want to trade with real money on this, try it, be comfortable with it, and then try it with the real money.
Makes sense.
So
And then my last question is, Paji, how do you run the scanner that you're talking about?
it's a very simple scanner, and this like I usually try to code the scanner, but this was told to me by Sunny. So he told me that yes, I can go to the custom and add simple equations. I just need to have any condition here, which is a or, choose the price as open, and make the equation is equal to low.
Okay, got it.
It's
Or
very
highs.
simple,
Yeah.
and equal to high, and save it. So this condition gives you one kind of like start if you want to do that. Then there are inside days, for which I think we need to have a separate time because it's getting late. But inside days are really, really strong breakouts or breakdowns, which I tend to use. And I've shared this in the group multiple times, how to do the
Yeah.
inside days
Okay.
plays.
Turning mobile on. Okay. Thank you, Paji.
All right, now coming to the market. So market right now, if you, I'm explaining you from the point of view from FOMC. FOMC has started tapering, meaning now they are doing the bond buying program, meaning they are selling the bonds and they want to get money back from the market. Okay. And last week they issued a 30-year-old bond auction, and it was decimated. There were hardly any buyers because the yield on those bonds, meaning the percentage interest on those bonds, were pathetic. So that is another reason that FOMC have to start bond tapering on their side. Second thing, there are two parties which are there since 2013, or maybe I would say 2011-12, European Central Bank and Federal Reserve. Both of them are investing uh, trillions of dollars into the equity market, not directly, indirectly through bond, through corporate debt buy programs, and through treasuries. Okay. So once that money comes into the equity market, it takes about 2 to 3 weeks that money comes into the equity market. And that's why all of a sudden you have seen that from 2013-14 onwards, all the market went up besides the big corona fall, or there was a small fall around October of 2018, 2019. Okay. So now European Central Bank is pumping around $40 billion into the US equity and bond indirectly. And then there was $120 billion buying from FMC. But at this stage, they are not only buying, they are also trying to taper that buying program. Plus, they're trying to get the bonds which they have bought, they're trying to sell them off. So it's trying to compensate what ECB is adding into the market. FMC is equally compensating it by selling the. So there's no fresh money in the market. If there's no fresh money, market cannot make new highs. And if you realize in the past 10 days, only five stocks went up, and rest of the market, like the small cap index, is about down 10%. And you don't even realize because we tend to ignore Russell 2000, but that has lost about 10% from yearly highs. Look at SPY, it has only lost 1%. Look at Nasdaq, it has only lost 2%. But if you look at Dow Jones, you look at Russell, they have broke down. Russell has started. Look at Caterpillar, look at LMT, look at John Deere. All of these stocks, they went down. The only stock which went up, Apple, Microsoft, Google, Amazon. Amazon also came down 5-6%. Apple and Microsoft did not. So this is purely index management, where you keep the index high by keeping the high weighted stocks higher. So the money flow from all the small caps, all the growth stocks into this company. And that's why I just pumped. But now at this stage, whether it will sustain that, it will not. That will be clear in this coming week. Why? If you look at ES right now, ES is facing a good resistance. Like by now, I think you should be clear for 61.8 is a good resistance. It is getting that resistance right there. Okay, it has broken this line and is trying to come here. Okay, now once it comes here, it will lose at least 1 more%. Now, in order to break it down, rest of the stocks are already down in the SPY. If you have to bring it down, Apple and Microsoft will also go down. And Apple is on the verge of 61.8, which is like 146.2, and has a support at around 140. So it gives you an idea that yes, if index has to go down, Apple has to go down, Microsoft has to go down. And if you look at the weekly candles, direction wise, weekly candles gives you very clear idea. Right here, it was a bearish engulfing on the weekly, and bearish engulfing tends to give you two candles, one and one more. And as I said, it tends to come and love this. So 4250 will be a very good support. If we breach 4250, then it can get nasty. Right now 4330 was good, but at this time it's looking better. Then yes, if it comes around 4330, short it. If you short it, you will find that yes, uh, your decision was correct. Okay, so as of now I'm looking at short of the market, keeping a stop loss of 4330, and try to sell it as close as to 4818 to 4822 for 23. I will not go full-fledged short at this point, but I will wait for it to rise somewhere in the middle of this candle, which is around 4330, and then short it. That will confirm my direction that yes, if I'm right, I will have much better points towards 42, 47. If I'm wrong, my stop loss is about 5 points. So I'll be in a better risk and reward position. All right. Anyone else has any other thing? But this may not work if the stock is bullish. PC, I don't know in what context you are saying this. Can you elaborate? Anyone has any other thing for me? Any?
Navaldeep, Santosh here. I just joined late. Are you publishing this recording or?
Yes, I am recording this and I'm going to put this on my YouTube channel.
Okay. So you'll be putting it today or tomorrow?
I'll see because it's getting saved in the cloud. So I need to look out where it is saved and then publish it from there.
Sure. Thank you.
Okay. But one thing which I want from the Amazon, 1 second. For Amazon, okay, you need to understand regarding Amazon. See, Amazon trend is still bullish. I have not denied that. The basic thing which I've shared with you, that the green line is up, the trend is up, but it is facing the resistance. This was the resistance line, and this was the resistance line. It breached this 3656. Now it will come to 61.8, which is 35.43. It might take good support here and then bounce. If it doesn't, it will definitely come back and test 34.25. You trust it or not trust it, but you have to try this and validate it. Open High was an intraday tool if you do not want to do all this stuff. Anyone else? Like, this is an open platform now. Like, you have anything you can ask. If you don't, otherwise I'll close. And before close, I have one request to all of you. So nobody has anything? All right. So guys, I tend to do a very simple thing. I tend to go to my Twitter and post these levels every night, and I try to put my numbers over there. What I want from you is go there, add or join me on my Twitter so that you can use all these levels. And if you have any questions, I try to reply. Right now, I'm only posting market views, but I'm planning to also put specific chart setups as well. And like, I don't know whether you follow me or not, but my levels are not bad at all. If you have been like looking at for quite some time, and I think many people can confirm me that I'm not lying about that. Like, how many people here use my market levels? Come on, guys, say
I
that.
do for one, Paji.
So, what's your opinion on that?
I do,
How
Pati.
far they're different from reality?
Paji, to be honest, I'm a very beginner. So
Okay.
I take your levels and I put them as resistance and support levels. And sometimes when the trade is between, like, it plays up and down in this constant level, I just use the support and resistance levels to just do a little bit of scalping, maybe 1 or 2 points.
Okay. Anyone else who uses my or like refers my level? You have to speak up,
Yeah,
Sunny.
Pati.
Somebody has to speak up.
Yeah, Pati, we use it all the time. Pankaj hai.
Hi, Pankaj.
Yeah, it's very
Sandeep Paji. Yep, we do follow your thing.
So if you, I do not do anything different. I have shared what I do. Now you go back, try it out, figure if something doesn't line up for you, and then we can also like do one more session, maybe next week or down the line, to further refine it. Because what I shared with you is very simple strategies. You do not have to worry about so many things, so many indicators. Look at the candles, do something simpler, and achieve a better trading strategy. All right. So please follow me on Twitter if you have not done that in the past. I'm going to post this on my YouTube channel, and I will share this on my Twitter. So do that and let me know if you have any kind of confusion. My Twitter account is this simple number for you. All right. And if you find it useful, please share in your circles so that we can have more and more people coming and talking to each other. Because once we speak to each other, we tend to learn from each other. That's my principle, and I always try to share what I know. If I know something new, I will share with you guys, and I will not hold that. Yes, if I've learned from somebody, I will always refer and be thankful to that person. All right, so guys, this is pretty much it from me. And if you have anything, just let me know. You can post me, and then I can take it from there. All right. Thank you very much for
Thanks,
holding
Paji.
late in the night.
Thank you. Thank you,
Have a
Naval.
good
Thank you,
night.
Paji.
Bye-bye.
Thank you.
Thanks, Pari.
Thanks, Pati.